今からジムに行きます。今日も一日楽しいレッスンができることを願っています。いつものように事故のないように今日も一日無事に楽しく生きることを願います。主イエスキリスト、また見守ってください。アーメン。
アメン。天の愛するお父様、今日は、コートに行って自分の、ボランティア活動をした報告を、提出しに行きますが、どうにかあなたが私と共にいてくださることを祈っております。また、父が、エクササイズに励んでおります。どうにか体の回復が、そして元気になるよう体が強められることを祈っております。すべてを、あなたに委ねます。どうにかうまくいくことを願っております。車の運転をお守りください。そしてまた母が働いておりますが、ずっと働いて、教会に行っておりませんが、どうにかあなたが彼女の心の中に聖霊を通して働いてくださっていることを感謝します。どうにか聖書の御言葉を通して豊かな恵みが与えられますようにお祈りいたしております。事故のないように運転をお守りください。母の運転も、お守りください。お祈りいたしております。車の、カーボッシュが今無料のカーボッシュが、捉えてしまいましたが、安いところに行って登録をして、やっていこうと思います。すべてをあなたに委ねます。この祈りを主イエスキリストの皆によってお祈りします。アーメン。
Sometimes the stock market can seem like a roller coaster, but it's possible to enjoy both profit and peace of mind as a do-it-yourself investor, no matter what's happening in the market. A short video webinar about that is available at soundmindinvesting.org. Financial wisdom for living well. soundmindinvesting.org. This is American Family Radio, a listener-supported ministry of the American Family Association.
Here on American Family Radio. Coming up in our next segment, the final segment of today's broadcast, Bob Dole stops by. Bob is Chief Executive Officer at Crossmark Global Investments, frequent contributor on Fox Net Business and CNBC. He's a Christ follower, and he joins us each Monday with his update on the markets and the economy. Find out what Bob
We have two annuities that are flushing out. We're taking the principal out, and that will be $1,100 that will disappear in 4 years, regardless of how long he lives. So I'm looking at like $4,000 drop in my income if something could happen to him. And so I do have teacher retirement money of about $2,800 a month. My Social Security is $662 a month, and I have 403B money, which is about $2,000 a month. But that $4,000 loss is what concerns me. I have gone back to work, and so right now I have about $4,000 that I can save, but I don't know, and I have, I just need to know where to put that money. I have a money market, basically, is my savings account. I've got about $80,000 in that, and I don't know what to do with that money because I don't need that much, available.
Yes.
To withdraw. I need to. In other words, you understand?
Sure. I sure do. Yes, ma'am. And what is your age, did you say?
75.
Okay, got it. So I think the first question is, have you done your budget? So I would kind of mock up a budget for yourself on your own and just say, okay, what would this look like in terms of my monthly expenses if I wasn't working part-time? What would my income be and what would my expenses be? Let me ask a quick just follow-up question before I continue that line of thinking. You said you're getting $2,000 a month from an old 403B. How much is in that?
Oh, I don't have any idea right off the top of my head. I'll get that. It's from our teacher retirement.
And that's on top of the $2,800 you're getting?
Yes.
Okay. Yeah, because if you're getting $2,000 a month from that, I would hope there's a good bit in that. I guess what I'm trying to figure out is that money that's going to run out because we're pulling more than a typical amount. I mean, normally to get $2,000 a month, $24,000 a year, you would want $600,000 in there. Because 4% a year is a 4% withdrawal rate, that should allow you to pull that $2,000 a month and maintain the principal balance over time. Not in any one quarter or a year, but over a 5 or 10 year period, you should be able to make up a 4% withdrawal rate. Even a 5% withdrawal rate, would be manageable, but that would still mean that, you've got $500,000 in that. If it's significantly lower than that, that's okay. You just need to understand that's going to be depleted over time, and we can't count on that being there if you live to 100 or beyond. So we need to understand, whether or not you're pulling an appropriate amount there. And you may want to consider, if you've got $4,000 a month in surplus right now because you're continuing to work and obviously your husband's income is there, maybe we stop pulling that out and maybe just let that grow. So step one is, should we be pulling the money out of the 403B? Step two is, what will your budget look like if it's just you? And can we make that work on, you're saying $2,800 plus $662 for Social Security because you've got the windfall elimination, and then another $2,000 a month from the 403B. I mean, we're talking about, roughly $5,500. Can you live on $5,500 a month? If you can, great. We're in good shape because on top of that, you've got the $80,000 in liquid savings. If not, or even if you can, we want to continue to build assets while you have disposable income. Do you have a retirement plan available with your current employer?
No. I've gone back to teaching, and I have a small, a part-time church job, which is a 1099 job. So no, okay. I don't have any retirement.
Okay.
With that.
So what you could do is just stick that money in a Roth IRA. As long as you have earned income, you can fund that. You can put in this year $8,000, and you can do the same for your husband. And that would allow you to put $16,000 a year away. And there's no required minimum on that, so that money could just sit in there and keep growing until you need it down the road. So I think the key is, let's work on that budget and see. You may find that even with all of his income evaporating after his death, that what you still have available is enough to cover your modest budget, but let's work through that and see if that's true. And then secondly, this is a great opportunity while you're still healthy, continuing to work. You've got this extra income from your husband.
ペルーの先生のとこは久しぶりかね、行くのは。久しぶりかね、ペルーの先生のとこに行くのは。
ずいぶん行ってないよね。
Portion of that 80,000 and invested as well in a conservative portfolio, but with a small allocation to stocks, maybe the rest in bonds. I'd probably keep somewhere between 6 and 12 months in liquid savings, and then the rest would be available to invest. Does that make sense?
It does. The only word that concerned me was modest budget, because I don't want to live on a modest budget.
Okay.
I want to make it.
Yeah, no, that's fair. What would you think would be realistic, just based on what you know your expenses are today? If it was just you, how much would you need every month?
Pretty much exactly what I'm making with him. So I somehow want to replace that $4,000 income. You know,
Yeah,
at least
so-
$2,000 or $3,000.
Okay, so you think you need somewhere around 8,000 or 9,000 a month?
Yes.
Okay, yeah. So, I mean, that's really just a function of the math. And so, in order to replace 3,000 a month, you know, ideally we'd have about 750,000 in a portfolio, because, you know, or 800,000. And so if you're not going to have that, then, you know, you just need to recognize that, okay, if all of a sudden we're pulling 6, 7, 8, 9, 10% a month out of the or a year out of the account, it's only going to last so long. Eventually we're going to deplete it. And so I think the key for you guys would just be, how much can you sock away, you know, for as long as the Lord gives you your health. You've got dual incomes, and you've got plenty of disposable income right now because you got his income, plus you're working on top of your teacher's retirement, Social Security. Let's just take as much as we can there and sock that away, get it invested, and let it grow. The good news is you've got a nice solid base of income, and I think you know, you're heading in the right direction. But I'd probably get with your advisor to help you calculate those numbers. I got to hit a break. Stay on the line. We'll finish up off the air. Our thanks to Certified Kingdom Advisor Wade Chessman, President and Wealth Advisor, and his team at Chessman Wealth Strategies in Dallas for their support of faith and finance. Their goal is to help their clients expand their understanding of biblical financial principles and how to implement them. The website is chessmanwealth.com. The phone number is 214-572-2120. Investment advisory services offered through CWM LLC, an SEC registered investment advisor.
It was a bad move. Target invited men who say they feel like women into restrooms and changing areas designated for women. They probably guessed other retailers would follow their lead, but they were wrong. Others saw that bandwagon was headed in the wrong direction. We're not ready to sacrifice the safety of women and children for the sake of progressive bathroom policies. Invite Target to make a better move. Sign the Boycott Target Pledge at afa.net.
Financial fear is real, but so is God's promise to provide. At FaithFi, we know the daily stress of money can overwhelm your heart, but Jesus reminds us to look at the birds of the air. They don't worry, and yet our Heavenly Father feeds them. In Look at the Sparrows, a 21-day devotional, you'll find peace by focusing on God's faithfulness as you discover how to overcome financial anxiety with faith. Visit faithfi.com/sparrows and begin your journey with Look at the Sparrows today.
Do you feel like your hands are tied with debt, preventing you from serving God? If you have credit card debt, Christian credit counselors can help. Through our debt management program, we can get you out of credit card debt about 80% faster while honoring your debt in full. For more information on how Christian credit counselors can help, visit ChristianCreditCounselors.org. That's ChristianCreditCounselors.org, or call 800-557-1985. 800-557-1985.
Thanks for joining us today on Faith and Finance here at American Family Radio. I'm Rob West. Here in our final segment today, we look forward each Monday to being joined by our good friend Bob Dole. He's a frequent contributor on Fox Business and CNBC. He's Chief Investment Officer and CEO at Crossmark Global Investments. Bob, good morning.
Happy Monday, Rob.
Not a lot of conviction on the markets today. Looks like fairly flat across the board, I guess, even though the bias is down. What are you watching as we begin a new week here?
Well, it's heavy-duty earnings season. This week and next week are, not that there weren't a lot last week, we'll be inundated with earnings reports. Of course, they're important in their own right, Rob. It'll be, what do the companies say about how business is looking for the fourth quarter and into 2025? That's what we're watching closely.
Yeah, no question about it. Bob, consumer sentiment, you have a comment on that in your deliberations this week. Where is it at, and how does that factor into where the market might be headed?
Yeah, consumer sentiment is important because it helps figure out how much money consumers are going to spend, and that's the biggest part of our economy. According to the University of Michigan monthly survey, October, not so good. It deteriorated, largely because consumers are expecting inflation to move back up, which is kind of interesting. So after 3 months of slight improvement, this most recent month was a downtick for consumer sentiment.
Yeah, and even though sentiment is heading down, I mean, for all intents and purposes, this economy still seems to be chugging along quite well. And in fact, we've seen revisions upward on GDP, right?
We sure have. The GDP Now model out of the Atlanta Fed raised third quarter GDP from 3.2, which was vigorous, to a more vigorous 3.4. Last week we got more information. Retail sales better than expected. Initial unemployment claims better than expected. So, yeah, the economy's humming along just fine. Now we still have to get through the aftermath of the impact of the hurricanes, which will be substantial, and we'll see how that all takes place in the next few weeks.
Yeah, and the market's shrugging off any bit of bad news, and I guess signaling at least that, obviously we're seeing what's happening with the election, and it's looking more and more convincing that perhaps President Trump gets reelected. I assume the market likes that. I'd love your comment on that. But then secondly, that perhaps we're going to see this soft landing that the Fed was hoping for.
Yeah, on the latter first, there's no question with valuations where they are, i.e. fairly expensive, earnings growth expectations very vigorous into the double digits, as we talked about before. Credit spreads, the difference between the interest rate on government securities and corporate and high-yield securities is pretty narrow. All of those things say the world's in great shape. We're going to have a soft landing. In terms of the election, yeah, the polls are moving that direction. It is still true in the swing states. The margin is statistically not yet at the point where we can say somebody, in this case President Trump, is fully favored. We'll see how that shakes out in the next 2 weeks, Rob. But the markets are basically saying, look, if it's Donald Trump, we're probably going to have more vigorous growth, more tax cuts, a little higher inflation than we would under a Harris administration.
Yeah, and what about on the flip side? Because I know Joe in Indiana is holding, he's wanting to know, how would a Harris presidency affect your thoughts on the market in the future?
Well, as you've heard me say before, Rob, it depends not only who's elected president, but what does Congress look like? If, for example, President Harris, as the questioner is asking, is elected president, and she has a Democratic Senate, which is very unlikely, and a Democratic House, the market won't like it at all because of the big tax increases that would come into play that would hurt corporate profits. But the probability of a Democratic sweep is not very high at all.
Yeah, so essentially that divided government kind of puts a throttle on the change that can happen, and that's what the market prefers?
Exactly, in either direction. If it's a Republican sweep, I think that's less negative on the market than a Democratic sweep, but it will, let's put it this way, divided government prevents whoever is president from doing, quote, extreme things. There's a check and a balance, as the founders of our country put in place, and markets will take a sigh of relief that nothing extraordinarily extreme can be done.
Yeah. Bob, what about, I mean, I know there's significant thoughts related to the death tax under a Harris presidency, and of course there's going to be increases on taxes, a lot of spending that will happen as well, and we know that the debt is becoming a bigger and bigger issue. It's not an issue until it's the only issue, right? So how long does it take for these things to work themselves through the system such that it really could put a damper on macroeconomic productivity?
Great question. Only God knows, but I think it's safe to say now, with interest expense on federal debt, the largest component of the federal budget, we're in that territory now. You've heard me talk about the bond market vigilantes coming out and saying you can't keep doing this, and in that case interest rates will go up. Interestingly, we've watched the 10-year Treasury yield move up from 350, 360 just about a month ago. I'm looking at my screen, it's 416 today. That's part of what's going on. Expectations that we'll have a President Trump, a little more inflation, a little more growth, but also concern about how we're going to pay our bills.
Yeah. One last question, Bob, real practical. You just mentioned the 10-year Treasury at 416. For folks that are maybe lamenting the fact that their CD rates are coming down, about the best they can do, north of 4% is maybe a 3-year CD. If they can wait a full 10 years, do you recommend somebody buy a 10-year Treasury outright?
Yeah, you can have some of your portfolio there. My belief is under Donald Trump victory, probably interest rates move up some more, and that 416 we're talking about today could be 450. So I'm saying have a little dry powder if you're trying to look at a 10-year horizon. You can probably get a little better deal out there.
All right, very good, Bob. We always appreciate it, my friend. Have a great week.
You the same. Thanks.
That's Bob Dahl. He's CEO and CIO at Crossmark Global. You can sign up at Crossmark Global to get his weekly Dahl's Deliberations. Let's go to Indiana. Joe, how did that resonate with you? And do you have any other questions just about the trajectory of the markets under a potential Harris presidency?
Wow, Rob, what a great way to answer my question. That was pretty cool to have Bob Dahl pipe in on that. And I should have phrased my question that way in reference to on either side. And that, if there is a Democrat sweep, I am probably going to have a hunker down mentality, not to the extent of pulling all the way out of the market, but very conservative in investments. I've done well for myself, and I would probably, and don't really need the money that I've invested. I have enough to live on without it. So, I would probably recede from the market severely. What do you think?
Yeah, I'm always hesitant to make, full-scale moves in one direction or another. I mean, I think there's a reason to be more strategic in your investing philosophy and yet still stay long-term on your focus, just because the implications, at least economically, tend to be a little bit more muted than we often expect them to be, especially with divided government, to Bob's point. And I think it's just looking very unlikely that we would have control across the board on either side at this point. Now, if we were to get it,